Oil prices continue to be on the rise over the past week, and the bullish sentiment for the commodity seems to remain present. In today's report, we are going to have a look at the data relating the US oil market and continue to view the fundamentals surrounding the international oil prices. To conclude the report, we will also provide a technical analysis of WTI's daily chart. There were some bearish signals stemming from the US oil market, as on one hand we saw Baker Hughes reporting another decrease of active oil rigs in the US economy. On Tuesday, API reported an increase of US oil inventories. The release tended to imply the existence of a slack in the US oil market, as demand was not able to catch up with production levels. For further confirmation of an existence of a slack in the US oil market, we highlight the release of the weekly EIA crude oil inventories figure in today's American session. Should EIA also report an increase of oil inventories, then we may see the release having a bearish effect on oil prices, as it would justify the picture provided by API. On the demand side of the international oil market, we note that the statement of OPEC's General Secretary, peak oil demand is not on the horizon. The statement contradicted IEA's forecast for demand in oil to peak before 2030 due to the rise of EVs and renewable energy sources. He undermined IEA's forecast by highlighting that oil demand growth is to remain strong in non-OECD developing world. Oil demand continues to increase, citing relatively forecast, and that many parts of the world are witnessing a consumer pushback as populations comprehend the implications of ambitious and unrealistic net zero policy agendas. We tend to expect the feud to be continued, and despite OPEC being understandably biased, its influence over the international oil market remains relatively dominant. In addition to the classic demand-supply factors that affect oil prices, we highlight once again the uncertainty caused on a fundamental level by the Israeli-Palestina conflict. It should be noted that market worries about the issue tended to intensify in the past few days as the Israeli Defense Forces, including boots on the ground backed by tanks, warplanes and drones, moved further into the city of Rafah, killing 8 people, as reported by Reuters. At this point, we also highlight the flaring up of the war in the northern Israeli border, with Hezbollah threatening even third countries, which it considers as assisting Israel. Overall, the situation seems to be escalating further and could intensify market worries for a wide flare-up in the area that in turn could tighten oil supply even further and thus could have a bullish effect on oil prices. WTI's price action broke above the 80.25 resistance line, now turned to support. We tend to maintain a bullish outlook for the commodities price as long as the upward trend line guiding it since the 5th of June remains intact. We also note that the RSI indicator, which is above the reading of 50, implying a bullish predisposition of the market for the commodity, while the 20 MA, which is also the median of the Bollinger Bands, has started to adopt an upward slope. Should the bulls maintain control as expected, we may see the commodities price starting to aim for the 84.10 resistance line, and should the R1 be broken, we set as the next possible target for the bulls the 86.80 resistance hurdle, which was able to reverse the upward movement of the commodities price in the early days of April. For a bearish outlook, the bar is high as the commodities price action would have to breach the 80.25 support line, but most importantly, WTI's price action has to break below the pre-mentioned upwards trend line in a first signal that the upwards movement has been interrupted. Yet even that not may suffice for a bearish outlook, as we would require WTI's price to also break the 76.70 support base, thus paving the way for the 71.85 support barrier. That's a wrap for today's financial news. Until our next update, from all of us here at IronFX, we wish you solid trading.